morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs, and the general trade setup looks decent. The SGX Nifty has recovered significantly from the lows of the day. It's up almost 20 points at this point of time. The Bank Nifty will be much in focus given the fact that ICICI came out with numbers and the ADR reacted positively. So if you're looking at the ADR was up almost 4.2%. Wipro did well, it was up almost 2%. Vedanta and HDFC Bank were the other two ADRs. We ended with a positive bias. Now, in terms of which other stocks that didn't do well, Dr. Reddy's was down almost 1%, Infosys was down over 1%, and Tata Motors was down almost 0.3%. Now, as far as crude is concerned, the uptrend continues overnight, but today in morning trade, it's down close to 1%. But nevertheless, WTI is trading about the $70 barrel per mark, and Brent is trading about the $75-50 barrel per mark. As far as base metals are concerned, yesterday the LME was shut, so these prices are not reflecting. But look at what's happening with China. Zinc continues to surge. It's up almost 1.25% up. Aluminium has a positive traction. What is not doing well today is the iron ore futures in trade. Now, if you're looking at the precious metals, that also are trading pretty muted at this point of time. Fund flows, FIs were net sellers in the markets. Yesterday, they sold in 635 crores. DI bought in almost 1,000 crores in the cash markets. So overall, FIs in this month have managed to sell 2,000 crores, and out of which 1,700 crores has been purchased by DIs in this market. Sector-wise, the Nifty was doing well. It was up almost 100 points. The mid-cap and small-cap also did well in trade. Some of the sectors that didn't do well was the Nifty Pharma, which was down almost 0.5%. You also have the PSU Banking Index, which was up almost 2% in trade. So significant amount of traction that was seen on the exchange. Now Wix, if you're looking at it, the Wix was up almost 4%, coming close to the 14 level in trade. Overall, the Nifty was up almost 97 points. Reliance, ICICI Bank and ITC were the major contributors on the positive side. What didn't do well was TCS, HDFC Bank and Lupin, which contributed on the negative side. But Agam is here and he will talk about what's happening on the FNO side. Agam, what are you seeing?
Sure, Darshan, we have seen the Nifty move up as by as much as 100 points. So that's been a positive, but there's very little change in open interest when it comes to the Nifty, as you can see here. And when it comes to the Nifty Bank, on the other hand, that has been about 13% addition. But this is largely because of the anticipation of earnings from ICICI Bank. Let's see what that brings us as far as the Nifty Bank goes. The India Volatility Index did move up, now inching back to the mark of 14, and this is on expected lines as we move into the Karnataka elections. But the put call ratio also edging up higher now at around 1.55. When it comes to changes in open interest, a little more base formation at around 10,500 and 10,600 puts, as we saw earlier in trade and earlier in the series. Well, we do have Wockhardt, which enters the FNO band. On the other hand, PC Jeweler moves out of the FNO band. And of course, two other stocks that I'm keeping an eye on the gaining end, Exide, which has seen a near 15% increase in open interest towards fresh longs. We also had Amara Raja Batteries, which also did very well. And on the losing end, Ujjivan Financial down by as much as 6%, near 20%, well, added towards longs. So some amount of weakness coming in. But once again, all eyes will remain on the India Volatility Index as we move into the event and see at what levels does it move up to above. But this is as far as our own markets go. Let's now go across to Rami Inocencio for a recap of what's making the news around the globe.
The White House says Chinese President Xi Jinping's top economic advisor now plans to visit Washington for follow-up trade talks. That after Trump administration officials returned empty-handed themselves from Beijing. Vice Premier Liu He will travel to the U.S. next week. Analysts say each side has issued a long list of demands that the other is so far refusing to meet. And investors may get more insight into the U.S. trade deficit with China. That's when Beijing releases its latest trade data in about an hour's time from now. China's April trade balance is expected to swing to a surplus of almost $28 billion. That after a nearly $5 billion deficit, as you can see back in March. Economists surveyed by Bloomberg have forecast an 8% jump in exports and a 16% gain for imports. Back in the U.S., Atlanta Fed President Raphael Bostic says the central bank can accommodate an overshoot of its inflation target, and he isn't worried by U.S. crude prices rising past the $78 a barrel mark. Bostic says that is a good thing that the Fed's preferred measure of inflation hit 2% back in March. He doesn't see higher energy prices fundamentally changing the economy's trajectory. And Australian Treasurer Scott Morrison delivers his budget later this Tuesday with company and individual tax cuts on offer ahead of a national election due within a year. Higher commodity prices have delivered an unexpected revenue windfall, and households are pressed between high debt on one side and weak wage growth on the other. Morrison is reportedly set to announce a return to a budget surplus in the 2020 financial year. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ramy Inocencio, and this is Bloomberg.
I think that they're just getting to know each other, and there are some very complex issues. And they laid out, which I think is good. They laid out what they want from the American side, and the Chinese side laid out what they want, and that's how you start the conversation. And now they're working on specific things. What do you mean by that? And so hopefully they'll make progress. We need there to be progress to be made.
Do you think a trade war is possible?
It's always possible, but it's not the preference for. I hope it's not the preference for either side.
Yeah. Do you think their list of demands are too far apart, though? It's going to take quite a while.
No.
No.
No. I think when you go to trade, you talk about intellectual property or tariffs or equity caps and where you can invest and how you protect investments, and it gets into a lot of detail. But there's no reason it can't be bridged. And if both sides have good faith, if they don't, then it may not be bridged, and then you have a different economic relationship between the United States and China.
You believe there's good faith? I know Stephen Roach, formerly of your competitor, he says that the U.S. approach has been all stick, no carrot. Yeah, I don't know about that. I mean, like I said, the president's laid out certain issues that a lot of the business community would agree with around equity caps, transfer of property, non-tariff barriers. And I think the Chinese know that some of those are true, but they're not going to give in to anything if they know exactly what the deal is going to be or something like that. The President Trump would also say he's got a great relationship with President Xi. They built up a bond of trust, that he wants some of these trade things fixed. And our president has laid out some very tough things, but he's also negotiated in other cases. I pay a little less attention to tweets, a little more attention to what are they negotiating, what's on the ground. They did a free trade deal with Korea. Mm-hmm. We negotiated it.
Yes, and they're talking about, from what I hear, they're talking about having an agreement in principle on NAFTA, hopefully next week or two. So, it is doable. And I think both sides do want it. So I do think there's goodwill there.
Primary driver behind the rally in prices, and we do have an $8 target now for the summer. We've raised that, and we think it's actually coming from Venezuela. Venezuelan production has come off by around 700,000 barrels a day in the last 12 months, and obviously the Iran deal would add to those numbers if we started losing exports from Iran. So this is, I think, going to exacerbate the problem, and it is only partially priced in. I think there's room for prices to move higher, depending on what President Trump decides to do with the Iran deal.
Yeah, so just to be clear, obviously we've got Venezuela's, you've mentioned, issues in Libya, of course, as well, and then throw in Iran. So are you saying actually that a collapse of the nuclear deal is what pushes us now from a $70 barrel level to $80 a barrel by the summer?
No, I think, just to be clear, I think we are going to $80 a barrel almost regardless of what happens to Iran. And I think the Iranian situation will just make things worse. But remember, the market has been trying to cope rather, with a major supply loss from what was once one of the biggest producers of oil. The Iranian deal, again, depends a little bit on how it's implemented. I highly doubt we're going to see a reimposition of oil export constraints on Iran from day one. I mean, that would take a lot of oil out of the market, potentially starting next week. So I'm not sure that's something this administration wants to do ahead of the midterm election. But it maybe gives itself 180 days, or maybe maybe 9 months. I don't know. But it's certainly we are seeing a lot of tightness in the physical markets, and it would certainly exacerbate the ongoing problems.
Back to local equity markets. Stock of the day is Pfizer on back of good set of numbers reported by the company. Revenue growth, we're looking at an uptick of 19% to a number of around 520 odd crore as compared to nearly 438 crore that we've seen in the March quarter of the previous year. If you look at the net profit, that's a 2.5-fold, that's 42% uptick there at a number of around 152 crore as compared to 107 crore in the corresponding quarter of the previous year. It has been a healthy operational show for the company, 46% growth at 138 crore. Margins have shot up to 27% as compared to 22% in the corresponding quarter. What have gone behind the making of the numbers? Well, the total expenses as a percent to your net sales, that has come down for the company. This along with the higher revenue. If you look at the further bifurcation in expenses, we're seeing a downtick coming in from other expenses, which as a percent to your net sales have dropped to 19% from 28% earlier. In terms of FY18 performance, it has been a muted top line growth for the company, flattish growth, in fact 0.11% at a number of around 1,968 crore. This is on account of discontinuation of Corex cough syrup, and also along with certain brand discontinuation. Along with that, however, the net profit has risen as much as 7% to a number of around 360 crore as compared to 336 crore in the previous year. EBITDA, it has been a good show there. Healthy operational cost saving measures have led to a good operational performance coming in from the company, a 43% growth there at a number of around 500 crore as compared to 349 crore that we've seen in FY17, in effect of which the margins have shot up to 25% as compared to 18% in FY17.
Some relief in the bond markets. The benchmark 10-year bond yield closing down by 10 basis points at 7.62%. Friday's close was 7.72. The relief came on account of the Reserve Bank of India announcing bond purchases via its open market operations program. That announcement came late on Friday after the markets had closed. Essentially, the RBI said that they would buy 10,000 crore worth of government bonds in order to take care of the liquidity situation and in view of the durable liquidity needs in the future. That's the statement that came in from the Reserve Bank of India on Friday. Now, it came in at a time when liquidity, while tightening, isn't all that tight. The call money market rate has remained close to the policy rate of 6%, and the banking liquidity indicators are also still mildly in surplus to neutral. So there isn't a large liquidity deficit. So the RBI coming in with these bond purchases at a time like this is being seen as a step to try and control bond yields in the market. Remember, a whole bunch of measures have been taken both by the government and the Reserve Bank of India to try and manage yields. So first it was the government which first cut its FY18 additional borrowings. Then it came in and said that it would not front load the FY19 borrowings. It also suggested that the overall borrowings for FY19 would be lower than what had been put out in the budget document. When none of that worked, the Reserve Bank of India stepped in. They announced that they would allow banks to stagger the hit on account of mark-to-market losses on their bond portfolio. They also eased some of the FPI limits and changed some of the FPI rules in the hope that bond yields would calm down a little bit. But through all of this, bond yields have dropped but then moved back up closer to 770 and in the range of 770 to 775. The question is whether the decision to start open market operations and bond purchases via open market operations will actually lead to a longer term drop in bond yields. The answer to that will lie with the RBI itself and whether it decides to continue open market operations. Indranil Sen Gupta of Bank of America Merrill Lynch in a note on Monday said that he expects these bond purchases to continue, and on account of that he thinks that liquidity in FY19 will actually be in surplus mode.
From the money market space to the commodities, starting off with oil prices, we did see a dip below the $70 per barrel mark after Donald Trump announced that the Iran decision will come later this day. Now, WTI has trading about 1% lower, and this is the first time in the last 5 days that we are seeing a downtake for oil prices. Now, we understand that Trump is likely to announce the Iran sanctions decision at about 2 p.m. local time, so we'll get you all the latest updates tomorrow morning from that event. And also the US crude oil inventory is likely to surge more than 1.2 million barrels for last week as per a Bloomberg survey. So that's a negative coming about for the oil markets. As far as the base metals are concerned, no cues came in from the London Metals Exchange on account of it being shut due to a holiday there. But if you look at the Shanghai Futures Exchange, the base metals are in fact trading mixed, with zinc, which is the top gainer, that has gained more than 1%, and this is the second consecutive day that it has been surging, while copper and steel are trading mildly negative, and we have aluminum, which is trading absolutely flat. But watch out for the SGX iron ore prices, which are trading about 2.5% lower, and this is the first time in 7 days that we have seen a downtick for the iron ore prices. As far as gold prices are concerned, we saw some bit of dip come about on account of a surge in the dollar index.
Back to local equity markets, bunch of results and news that we're tracking this morning. Apart from Pfizer, we have a small cap company which has made it to the list in terms of earnings. If you look at the top line growth, it's more than 2.5-fold jump at a number of 51 crore as compared to 20 crore for JK Agri Genetics. For EBITDA, it has been an operationally good show as compared to an operational loss of 7 crore. The company has registered an operating profit of around 10.5 crore. The net profit, because of which has stood up for the company at 5.6 crore as compared to a loss situation. Trident, there was a weak set of number reported by the company. Well, if you look at the top line performance, it's a 6% downtick that we are witnessing in the top line performance of the company, even as the EBITDA growth has been muted at 3%. We're looking at a net profit decline of more than 49% for this counter. This is mainly on account of the other income, higher other income that we've seen in the base quarter. Tata Coffee, yet another weak set of number reported by the company. Revenue has actually just shown a growth of around 9.9% at a number of around 440 crore. EBITDA has seen a decline of 67% because of which you're seeing a hit even in the bottom line performance, along with the higher tax incidence, which has actually weighed down on the net profitability of the company. If you look at the other news that we're tracking this morning, we are expecting some sort of temporary blip coming in for Tata Metallics, where the plant, where its Khargapura plant operation for which have been halted on account of issues with worker unions. Unichem Laboratories has received an US FDA approval for one of its hypertension drugs, so some positive reaction coming in for that counter. Also, Lupin is expected to remain in focus on account of receiving a US FDA approval for an inflammatory drug ointment. It has a sale of around $120 million. And last in the list and important to us is PNB Housing shareholder, which is seeking to raise as much as $153 million in placement matter. Now, the shareholder is looking to offload as much as 5% equity in this counter for at least 1,280 per share, which implies a 9 to 10% discount as compared to the current market price of the share.
Well, ICICI Bank managed to more or less meet estimates in the fourth quarter with no big surprises coming in, at least not a loss for the quarter. So the net profit halved to nearly 1,020 crores, and that was mainly on account of some small tax write-back and also about 3,200 crores of one-off capital gains coming in from the stake sale in ICICI Securities. But as far as the business momentum is concerned, that continued to remain steady, with the domestic loan growth increasing to about 15%, largely driven by a strong 21% growth in the retail book. Deposits growth, on the other hand, also came in at about 14%. The impact of the new RBI circular was in form of an addition of nearly 10,000 crores to the gross NPAs, which shot up to a near double-digit number of 9.90%. In fact, the slippages also jumped to about 15,700 crores from 4,400 crores in the December quarter. And the good part is that the watch list has reduced by nearly 75% sequentially, from 19,000 crores to about 4,700 crores. The bank also managed to do a good job on recoveries and upgrades front, which came in at about 4,200 crores for the quarter as compared to about 1,100 crores in the December ended quarter. The bank did say that they haven't used the RBI dispensation on spreading M2M losses on bonds, but however, they have taken into account the RBI dispensation on a lower provision cover of 40% on the NCLT exposures as compared to the previous 50%. So their overall exposure to NCLT accounts stood at about 15,000 crores with provision cover of 50% on them. The good part also was that there was no requirement for divergence reporting for the FY17 audit conducted by the RBI, which means that the differential in the gross NPAs would be less than 15%. And while there was no discussion on the Videocon matter in the board meeting yesterday, Chanda Kochar, on her stepping down, did say that the board has already stated its stance on the matter and they had nothing to add to this. Now, brokerages have retained their stance on the bank because of two factors. One, they believe that a majority of the stress recognition is done and valuations for the bank at the current levels don't seem very demanding. So there are some minor target price tweaks coming in. Credit Suisse has cut the target price by a sharp 11-12%. On the other hand, you have many others like Jefferies, Philips Securities, Prabhudas Lilladher and Motilal Oswal, which have hiked the target price by a small 2.5 to 3%.
Let's get you a check on the top 3 stocks to watch out based on yesterday's delivery buying and selling as well. The first stock that you have to keep on your radar, that would be Exide. Now, post results, the stock actually surged 5.5% and saw delivery buying of more than 100 crores. The delivery volume, however, surged 170% at about 42 lakh shares as compared to its 5-day average, and the total volume surged more than 3 times at more than 1.5 crore shares as compared to its 5-day average. Second stock to watch out for, that would be Jubilant Food. Ahead of the results today, that gained about 1.6% in trade and saw delivery buying of more than 70 crores. The delivery volume surged 80% at about 2.8 lakh shares as compared to its 5-day average, and the total volume also surged nearly 80% at nearly 10.5 lakh shares as compared to its 5-day average. Last and final stock to watch out for, Lupin. Now, that was down about 2.5% in trade and saw delivery selling of more than 50 crores. The delivery volume shot up 80% at nearly 6.5 lakh shares as compared to its 5-day average, and the total volume just about doubled at nearly 23 lakh shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is IFL on Jindal Stainless. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 107. Now, according to the brokerage, the company will further enhance its utilization levels, which will drive the volume growth for the company. And along with this, the company is also looking to expand its downstream facilities. Now, this will boost the incremental revenues and the net profit for the company. However, margins would marginally drop because of the expansion plans of the company. Now, the brokerage is expecting the company's volume, EBITDA and net profit to grow at a compounded annual growth rate of 11%, 9% and 25% over FY18 to FY20. Also, steady ramp up in utilization will improve the profitability and cash flow, which will further aid the company to exit from the corporate debt restructuring scheme. Now, according to the brokerage, the company's balance sheet is also improving as healthy cash generation is leading to deleveraging of balance sheet. Lastly, it says that the valuations of the Jindal Stainless are currently attractive. Second, we have is Kotak Securities on Motherson Sumi. Now, the brokerage has maintained its sell rating on the stock with a target price of 265. Now, the brokerage has analyzed the financials of Motherson Sumi along with its international peers, and it says that the premium valuations of Motherson Sumi are not justified. It says that the EBIT growth of Motherson Sumi is in line with peers. Now, Motherson's EBIT grew at a compounded annual growth rate of 11% over the last 3 years, while that of its international peers grew at a CAGR of around 10% over the same period. However, the return ratios, that is the return on equity and return on capital employed, are significantly inferior compared to its peers due to lower operating margins and higher working capital requirements. Lastly, it says that investors believe that the company will report superior growth going forward, but according to the brokerage, this is already priced in.
The design of this board game started in 1904 with a woman named Elizabeth McGee. She was a fan of a book called Progress and Poverty by economist Henry George. In it, he argued that renting out land only profited a few individuals at the expense of the community. To teach people about George's theories, Lizzie McGee created a game with 2 sets of rules. In one, players all shared money when someone purchased a piece of land, and in the other, everyone tried to get as rich as possible while bankrupting others. This way, she hoped people would see how unfair land grabbing was. The landlord's game, as it was known, became popular, particularly among Quakers, with each person drawing the board by hand onto tablecloths or fabric and modifying the rules. One of those people was Charles Darrow. He would only use the rules that were cutthroat and made a version of the board in the shape of his dining table. He also took street names from Atlantic City, grouping them by color and adding small illustrations to create the board we know today. When Parker Brothers bought the rights to Monopoly from Darrow in 1935, they soon added a portly mascot with a top hat and cane, rumored to be modeled on wealthy banker J.P. Morgan. They also distributed every set with metal tokens, inspired by trinkets Darrow had used from his niece's charm bracelet. Within a year of the release, 35,000 copies of Monopoly were being made each week. Now more than 1 billion people in 114 countries have played the game. Classic and familiar, this is the design that set out to make us work together, but has been dividing families ever since.
The implications of President Donald Trump's decision on the Iran nuclear deal, crude oil prices, earnings, and of course all the market action, you'll find that on the website bloombergquint.com. Here are some more stories that you'll find if you log on though. A 5-judge constitution bench will today hear a plea filed by Congress party leaders challenging the rejection of an impeachment motion that was filed against Chief Justice of India, Deepak Mishra. The DSP Group will buy out BlackRock's 40% stake in a joint venture, DSP BlackRock Investment Managers. The deal, of course, is subject to regulatory approval. All right, that's all you need to know going into trade today. It's going to be a busy one, so do stay tuned. This is Bloomberg Quint.